Well, up next, we dive into the latest happenings when it comes to the grain markets. And joining Market Journal this week is Todd Hultman from DTN. Hey, Todd, thank you very much for the time. We sure appreciate it.
Oh, thank you, Bryce. Always a pleasure.
Let's start with the corn and soybean markets. What's catching your attention right now as we have our conversation?
Well, obviously, it's been a very tough start to 2024 for us on corn and soybean prices. The good news is we've got good export activity for our corn, and the demand for ethanol has been very good. But coming off of a supply last year of a record harvest, plus anticipating a possible increase in the combined production of Brazil and Argentina coming up here in the next couple of months, is just weighing the market down pretty hard.
I want to ask you about wheat and note that a viewer, he always watches each week on Saturdays, and he let me know just as we started the week, hey, you haven't asked about wheat lately. And I said, well, good news. We've got Todd Holtman joining us, and he'll give us some thoughts there on winter wheat, wheat broadly speaking. Kind of a tough market as we sit here at the end of March, isn't it?
It is very tough, and honestly, I don't have a lot of good news for our wheat producers. Unfortunately, we continue to be beat down to near our lowest prices in 3 years. In the big picture, Russia continues to dominate world exports with very cheap prices. The early outlook is that Russia's going to have another big crop in 2024. Of course, there's a lot of time before we see if that proves out or not. But overall, it's been just very difficult to sustain any rally in the wheat price. And of course, our own U.S. exports are posted at their lowest levels in over 50 years. So it's just been a very, very tough market.
Todd, on the topic of wheat, want to get to a viewer question. Someone wrote in this week asking about perhaps any winter kill, some concern around this cold snap we've experienced and will continue to experience into the weekend. Your thoughts on that? Any concern from you?
Well, yeah, we do have a winter storm coming up again this weekend and early this week. But honestly, Bryce, my money is on the winter wheat crop itself. It's proven itself so hardy. We've had, I would say, worse threats than this, and so overall, I do not expect a significant hit to our wheat conditions.
One more question on wheat, then we can continue progressing forward. Just big picture, as you look at the wheat markets here in the U.S., the dynamics have certainly changed over the years. Talk about the global scene of wheat and why producers are struggling here in the United States to sometimes even break even on their crop because of the global factors.
Yes. Well, Bryce, in the big picture, for all three of our crops, we're suffering a chronic loss of export share in the world. And this has been most dramatically true in wheat. 2012, uh, Russia's Putin made an intentional effort to dramatically increase their wheat production. About 7 years ago, we were close on the export line with Europe and Russia, but since that time, it's been all Russia. They've ramped up their production to significant amounts. They've done it not for economic reasons, but for political reasons. That wheat buys them a lot of political influence in Africa and the Middle East, and that has really just kind of suffocated the export opportunities in wheat.
Appreciate your thoughts on that. Kind of continuing, I guess, that theme and looking broadly at the grain complex as we sit here in 2024. You got a pretty good article posted to DTN this week, sizing up where we sit and why prices are where they are for corn, soybeans, and perhaps even wheat too. Give me your thoughts, what you were able to share with the readers on DTN, Todd.
Yeah, well, it concerns me, Bryce. Here we are back in a surplus market of corn. If USDA's Ag Outlook Forum estimate comes true, we're going to have a carry of 2.5 billion bushels in the season ahead. Now, we've got a lot of weather between now and then to prove that out. But anytime in the past in my career, when corn has entered a surplus market, it's very difficult to come out of that market because we just don't have strong market incentives to help pull it out of the market. Typically, if we get rescued from low prices and a drought market, it's because of either weather or most recently, it's because we created a new ethanol industry. The one hope I have ahead is that corn and beans will somehow get at least a small share of the sustainable aviation fuel for the future. That could help our demand a lot.
Yeah, the university came out with a story this week, kind of sizing that up and how important that's going to be for markets moving forward here. I want to get your thoughts on soybean crush. The notebook crush report was huge, sharply higher than expected, is what my sheet of paper says. Todd, your thoughts there on crush?
Yep, those crush incentives, Bryce, continue to be very favorable. Roughly a $3 difference almost between the value you get from crushing the beans versus the value of the uncrushed soybean. That's a very strong domestic incentive for us. It's a strong source of demand that's been consistent throughout the year, actually for almost 2 years now. And moving forward, it should continue to be a good, stable source of demand for soybeans. This is very helpful this year at a time when our export sales of soybeans have really been lagging, and especially with another big crop likely on the way from Brazil.
Let's preview what's ahead here with the grain markets. In terms of reports, what are the markets and the folks who are trading the markets going to be watching the next couple of weeks, Todd?
Yes, well, we have a grain stocks report that'll tell us a bit about how demand has been recently, but I would say the one that typically gets the most attention, Bryce, is the prospective plantings report. And of course, last year we had a big planting in corn, which helped create the opportunity for that record harvest that we have in the fall. I don't think the corn acres are going to be as big this year as they were last year, but certainly 91 to 92 million is still possible, and that could still bring us a big corn crop in the fall. On the soybean side, I was disappointed by the low number of soybean acres last year. They tend to be the more profitable crop, and even now as we trade, soybeans is closer to profitability in its new crop price than December corn is. So I'm hoping to get a little bump in the soybean acres there, maybe 85 or 86 million. We'll see what USDA survey says.
All right, we'll try to keep an eye on all of it. Before we let you go, final word is yours. What kind of marketing advice or thoughts do you want to share with us, Todd?
Well, I would say, especially on the new crop corn price, I'm just not in a hurry yet to do anything. It's still below the estimated cost of production. And we do get volatility often in the spring and summertime of the year. I hate to count on volatility as really our only source of trying to get a better price, but we'll be trying to watch those put prices closely to see if we can bring up the floor. Our crop insurance levels are giving us protection just under $4 a bushel now. I'm hoping that by summertime we can improve on that with some inexpensive put options.